Hello and welcome back to Lazy Trading. I am Robert. Today's live market is a special treat. Both positions are in the green, but that means that we have some decisions we can make, and those decisions are ultimately going to have an impact on where and how the account goes. So let's get into the chart and really look at what's going on. Right now, our position of 441 units has a $4.34 profit, while our position of 440 units has a $1 profit. We have between both positions roughly a 25% profit overall, meaning if we just close out everything and walk away, we're going to get about 25%. But if we just close out the top position, the 441 units, we are going to end up with a 43% profit just on that one particular position, meaning that we do not close the 440 unit position. Overall, this could be quite an interesting little situation, and we have some decisions to make. Do we close out them both? Do we close out the one unit with the highest profit? Or do we do nothing and let the market continue going in its direction? One of the advantages of a demo account is we can do just that. We can watch where this is going to go. We already see the downtrend, so it's likely that the market's going to continue to go down even more. We can see that if we cash out now, we're at $1,011 for the account. That's quite significant considering this is just lazy trading. No real planning, no indicators, no strategy, just looking at the price and having a reason to buy. We can see also how long the chart is between both positions, how many days went by. Personally, my style would be to close out the one that is in most profit and leave the other one alone. But at the same time, I also think about the fact that this market has a pretty good wick on it, which means the buyers aren't going to settle very easily for this staying like this. So I think for the purposes of the account and for demonstration, we're going to close it out. So we go to the Positions tab. Not what I want. We go to the Positions tab, and between both positions, we have a $5.33 profit. So let's take and close it out. So you click on it, click on close, and now we're going to clean the board. Done. The position's completely closed out. We have added to our profit. And we have added so that now, no matter what the market does, our profits are booked. They're in our account, they're set, they're done, they're settled, on to the next trade. But what would that next trade be? That's a very difficult question because when we look at the market, let's back it up a little. We can see that if we go back in time, we have a very heavy uptrend. Could this be the beginning of a very heavy downtrend? We don't know, but we can clearly see every point the market pivots on the chart. So how do we try to figure out whether to go long or short? Whether to buy or sell in this kind of a market? Well, let's go to a higher timetable and see where that actually looks. Here is our weekly chart coming from the daily. We can see the weekly and we can see the same exact patterns. We have the down, we have the up, slight down, and then we have the big massive up push. From the weekly chart, we can see that the buyers are favoring a much lower boundary level. We can see that the sellers have given way somewhat to let prices go upwards. But overall, it's not going to be that dramatic, and we have a return point in the middle that the sellers might want to go back to for a level of consistency, or what both sides might consider a fair market value. So as we proceed and we look at what we're doing, the questions really revolve around how much risk do we take and what kind of risks are we looking at. We are still under the yellow line, or the upper level resistance area that hasn't been broken in quite a while. The current downtrending market is still pretty consistent, and we're not that far away price-wise in relation to the bottom yellow line, or the support level. So this tells me, looking at the market, that we are going to see more downward pressure, more downward price action. So I would be likely to open up a short position trying to capture more downward force. But the thing that I like the most is where the candle is at. And if we look at the month, we can see overall the month is very indecisive. Even though the weekly shows a very strong trend at the moment, we see that the daily shows a very strong trend at the moment. But the monthly shows the market at a bit of a stall. We can see within the markets that last month we actually hit a higher point than this month so far. So that suggests as well the potential for downward pressure. So from the standpoint of what I'm going to do in the market, I am going to open up a short. Let's get back to the end of the chart. As we see today's candle, it's quite healthy. And we can see we're almost at the midpoint with the closing price. So I'm going to open up a short. But I think I'm going to use an entry level, and I'm going to try to capture this point right here, the top of this candle. That way, if the bar retraces, we can catch in, and then if it goes back down like it did today, we can capture another profit. Now, of course, whether or not the market actually does that, nobody knows. So let's actually open up a short, 440 units, which is 1% of my account. And now let's put it to where we want. I want to get in right up here, right at the daily open. So if the market does retrace completely to this area on the screen, to the 1.56 range, then it will open up the order at 440 units. So let's submit it and see how it goes. And there we go. We have our order placed and ready to go. Now we could open up another live order right here, just because we are about halfway, and try to capture half a profit. So let's go ahead and do that too, just for fun. After all, we've only got one order in waiting, so let's open up a live order and actually get something on the books. And we're going to open up at 441 units. Remember the first in, first out regulation. And that's it. So now we have one live order and one order in the waiting. So if the market goes back down to this part, to the low part, we're going to get a small capture of about $1. If the market does retrace and go back up to our upper entry, then we'll get in for 2 positions and we'll be able to repeat what we just did today and hopefully get another $5 profit. So not bad for literally just doing nothing but checking the market once a day. Share your thoughts though. What do you think? Would you take both positions, or would you only take one position and let the other one sit on the table? Let me know how you would proceed with this kind of a situation or process. If you like this video, please hit that thumbs up. It does help the channel grow. Thank you for watching.